Hello everyone and welcome. Today I would like to give you a short introduction to Renko-Charts. So to start out, I have plotted the chart of the DAX index with standard candlestick charts right here, and each candlestick representing 1 minute of price action. So first of all, let us see how price is plotted in these charts. So we can see that on the horizontal axis there is time, and time is linear. This means a set distance on the horizontal axis stays constant. This means if this distance right here represents 30 minutes, then this will stay constant for the entire chart. You can also see this by using the date tool. So this is 30 minutes, and this will also be 30 minutes, and these are equal lengths. So if you're watching this video, of course you know how candles and candlesticks are formed, but just to recap, because I want to highlight the difference to Renko-chart. Let's just shortly recap how these candles are formed. So for the formation of candlesticks, time plays the important role. This means the opening price and the closing price are determined not by price action, but by the time. This is important. So a new candlestick forms whenever a set period of time has passed. And of course we ourselves set this time. So if we set it to 1 minute, then there will be a new candlestick every minute. And the opening and the closing price will just reflect the passage of time that we have set. But in my opinion, this is kind of an arbitrary assignment, because why should the opening and closing values, and in this case I'm referring to the opening and closing price of the candles and not to the market open and close, why should they be more important than any other price action that has happened, for example, in this candle? Why should that be? Why should the market care about the price? For example, if we switch to the 1 hour chart here, and we draw our supports and resistance and all of it, why should it be more important that a 1 hour candlestick closes above or below that line? Because isn't that just an arbitrary assignment that a set period of time has passed and the price is in that range? Why should the market care about that? So that's when the Renko-chart comes into play. So let me switch this. Now on the bottom I have plotted the Renko-chart. And just before we get started, I have not handpicked this region. You can see this is just simply the most recent price action. So I did not handpick this region just to fit my explanations. This is just the most recent price action that I will use to illustrate these ideas. So you can see, and by the way, these cursors are synchronized, so wherever I put it, here on the bottom, it will be on the top. So we can easily compare it. Okay, so let's get started. So you can see that the Renko-chart looks quite different from the candlesticks chart. First of all, the most obvious difference is that each of these candles are of equal size. And in this case, these bars or candles or boxes are simply called bricks, because they look like bricks. So this is the first important difference. Now let us look at the time axis here. And you will immediately notice that it looks strange because these distances are not consistent. So for example, we have a very fast price action right here, so we can see that all of this has happened in like 30 minutes, whereas we have regions where this same distance is representing like 2 hours. So this means that time is not the determining factor for plotting a Renko chart. For a Renko chart, the only thing that determines how the chart looks is price action. This means that a new brick is only formed when the price has moved a set value. So in this case, I have set the size of these bricks to 5. So this is indicated right here. So the DAX index has to move 5 points in order for a new brick to be printed. And it does not matter how long it takes for that 5-point move. This can be seconds or hours. So if there's simply no movement, then there will be no new Renko brick, because why should there be? Whereas in a candlestick, if we have phases with very little movement, a new candlestick will be created nevertheless, because there the passage of time plays the important role that determines when the open and the closes. In the Renko, that's not the case. So either there's movement and then we get new bricks, or there's no movement and we simply get no new bricks. So these are the first two important considerations. Now also, these Renko bricks have wicks or shadows. And these are very important for analysis of Renko charts. But first of all, let us look at reversals. So if you take a close look at the chart, you can see that whenever there's a reversal, there are not two bricks next to each other. So in order for reversal to take place, the brick has to print one lower or one higher. So what does this mean? So for example, we get this little downtrend right here. And then from the wick, we can see that it tries to push lower. However, this is where most people get confused. So why is there a wick? Well, it tries to push lower, but it simply does not exceed that 5 points. Okay, so maybe these were like 2 points, so it pushed down a further 2 points. But it did not reach the threshold of 5 points, and that's why there's a wick and not a new brick, okay? So we get this downtrend, price tries to push lower, but fails and creates this wick. And in order to get a reversal on a Renko chart, it has to move at least twice the amount of the value of each Renko brick. So for example, let's say price is here, so it has to move up these 5 points and then another 5 points to exceed the threshold and to create a new Renko brick. And this is significant because a reversal will only be indicated when there's a substantial move. And in most cases, it is even more than 2 times the value, because it can push lower like 4.5 points. And then it has to make a move of 14.5 points just to create this reversal. Okay, so this is why it is so nice to spot reversals on Renko charts, because a candlestick chart will, depending on the time frame, give you very early and false signals of a reversal. But the Renko chart, of course, it is chopping around, and there are regions where it simply does not work because it's a consolidation area and so on. Of course, no chart is perfect. and it is not the holy grail. But I would like you to admit that there has to be really a substantial amount of movement before this reacts. And the big advantage with this Renko chart simply is that you have these nice trends that you can follow. So for example, you go long here and you simply follow it through and you hold it through because you see no reversals. Whereas if you compare this where is it? So let us look for another one. You know, you can, if you compare it, you get so many chopping around. You can simply follow these trends. It filters out all of that noise that the market normally makes. Now all those scalpers that exit and enter and exit in a short period of time, all of that noise will simply be removed. That's the advantage of the Renko chart. Also, if you like follow a reversal strategy, it gives you very clear points where you put support, where you put your stop loss, and you follow it through. And in my opinion, that's the main advantage of the Renko chart, because why should the market care about time? We should only focus on the price action. And this is also nice, you know, for the anxious trader that always, we all know that we should not stare at the screen and watch our trades, but we do it nevertheless. So the Renko chart gives a very nice method to simply be confident and stay in the trade. I mean, if there's no reversal, why should you get out of it? So, that was the problem. Okay, so let us take a look at this once again. Sorry about that. So you see, we get this little downtrend, and then we get the reversal. So please look at the candlestick chart right there. So there's my cursor. So we go up, but then on the candlestick you can see that there's, so we get a little consolidation right here. You know, I mean, would you have stayed in the trade? I don't know, but I would bet a fair amount that you would have, or we would all have thought, well, should I get out, should I stay in? But the Renko chart simply, you know, you see it tries to push lower, but there's no reversal, so why should you get out? And you simply follow all these trends through. Of course, chopping around, you know, well, that's it, that's how it is, you know, you can't avoid it. But it will at least allow you to stay in these trades for as long as possible, and that's the important thing. Most people will close a trade once there's a little green in there, but you should ride them out as long as possible. That's the main advantage of the Renko chart, in my opinion. So I exclusively trade off Renko charts. Of course, you have to find your instrument and you have to find a strategy and so on. And let's, before I forget it, you actually the settings of the Renko chart, because it is, so that's the most important thing with the Renko chart, size. So, and TradingView gives you two options. So you either use the average true range, ATR, or the traditional. So with the average true range, it looks back a set period of time. So that comes from this setting right here. So it looks back 14 minutes, and it says, okay, in that 14 minutes, the DAX moves on average 1.49 points. And that will be the size of these bricks. The other is to set value to say, okay, I want these bricks always to be consistent, and I want them to be 5 points in size. And my next video will actually be about how we can do an educated guess at least to what size we should set these bricks. So this was my basic introduction into Renko-Chart, and I hope this was helpful to you. If you have any questions, feel free to leave a comment. I would also appreciate it to have some feedback, and I hope this video helped you. Thanks a lot.